Crypto crew, as usual, another trigger in the global markets. Japan's 10-year yield just spiked again. The same liquidity shock that front ran a 20% Bitcoin dump the last time happened again. And once again, crypto didn't wait for headlines. Bitcoin reacted immediately. So if you're not paying attention to this, you're going to be trading blind. Today, we're breaking down exactly what is happening in the crypto markets and the things that you need to understand in order to navigate these markets fully and make sure that you're on the cutting edge of the profit side. Welcome back, Crypto Crew. It's your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already, and make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we're cryptomaniacs. Oh, all right, let's get right into it. All right, we're looking at the yen carry trade. Now, I want to show you something real quick before I forget, okay? We said originally that 93,000 was going to be a tough level to get through, as a wall up there. We actually said yesterday, if it breaks 90, we're heading down to 87. Now, here, I want to make sure that you are very well aware with what is going on in the markets right and now. But I want to show you these two charts, okay? Just so you understand, we're not playing a bait and switch on you in any way. Remember, we said we were expecting this type of pattern to happen. We called it a traffic stop against a strategy stop, right? Remember we said that? But really what we just did was, it's the same. I want you to study the pattern. Okay, I want you to come back over to here, and basically we're saying the same thing. It's the yen carry trade setup. It's the same setup. We didn't know what was going to trigger a potential for this setup to occur. But since the yen carry trade is now back in the headlines, and we're going to cover that extensively, we're just calling it the yen carry trade right now. So as it stands right now, all right, let's talk about the real driver behind today's volatility. And it was the yen carry trade that actually shook the system up again. Japan flipped the switch again. Every time the Japanese, they can't get control of their yield curve. Okay, so their 10-year yield is spiking hard again. And every time it does it, the Bank of Japan loses control of the curve. Liquidity drains, and of course, it drains out of risk assets first, and of course, crypto. Okay, now I'm going to explain why that happens in a minute, but really, you just need to know that whenever you see, other bonds that are spiking, you're going to know that, what's going to happen is the old suits are going to run to where the yield is, but they're eventually going to swap out because they're going to realize they're not getting much yield there for their investment. The return on investment is like minimal and that's I'm going to get into all this today, because really I've been really mulling this over and thinking about this, like because I see the comments, and I also read other people, like, I'm not an influencer, I'm a trader, but let's say okay, you want to call me a YouTube influencer. I think I should be paid a lot more money if I am, but I'm not. I'm just a trader in this group. We're having fun trading Forex and also crypto. All right. But now, the point that I'm trying to get at is that when the Bank of Japan loses control of the curve, liquidity drains out of global risk assets. Now, the last time that happened, Bitcoin dumped 20% before the headlines even noticed. Now, we're on top of this because we saw it, we lived through it. Now, because crypto prices, liquidity is always ahead of equities every single time. But we have to watch IBIT today. IBIT's another one that we're going to be watching. Now, I'm doing this at 8:32 a.m. Eastern Standard Time. So IBIT, the market's not open yet. We expect IBIT to dump. Now, as long as it holds 46, now that would be, if it does, if it crashes back down to the 50, it's going to go to 48, maybe potentially even test the 46, right? If it does that, that's going to be more pain for Bitcoin. Now, these two things feed off of each other. So right now, Bitcoin did the dump. Now, IBIT doesn't know, the IBIT shares don't know, right? They're going to wake up, they're going to see the Bitcoin dump, and what are they going to do? They're going to dump. Now, it all depends on how much Bitcoin can recover to stop the bleeding in IBIT. So there's a lot of components here that are at work. So we just got to pay attention to them, right? So Bitcoin is reacting early, and today is your signal. We got to start looking for positioning in it. So here's a simple version of what's going on with the 10-year, the yen carry trade. I'll just give you really like a real simple version of it, right? For years, traders borrowed yen at like zero interest rates. Then they sell the yen, and they buy dollars with it. Dollar goes up because of that, because all this investment, US dollar is being pinned upward, pushing upward. Now you should be starting to think, crew, you should be starting to think like, well, if this is unwinding, doesn't that help dollar dominance to come off? Yes, it does. In the longer term, in the short term, the dollar dominance coming off isn't going to make that much of a difference because big shifts are happening. All right, so now what's going to happen? They pump capital. They buy dollars, and then they buy what? They buy U.S. equities. They buy long duration bonds, which they could be doing right now because they I would be thinking, yeah, I should take the long. When I talked about the 10 versus the 2, the yield curve play many videos ago. I'm not going to discuss that today, but the 10-2 is the yield curve play that traders are definitely doing right now. Now, we got tech momentum, and then, of course, crypto, the highest beta asset of all, gets some money put into it, right? Now, when the Japan carry trade is stable, liquidity flows into more risk assets. So in other words, the traders are happy with the yield they're getting. They're printing money, they're borrowing yen, they're selling it, buying dollars, and then basically just investing into all these different indices. Now, when that carry trade starts to unwind, which is what it's doing, the unwind always follows the same playbook. Traders close positions that they deem risky. Bitcoin, we've had what? A 36% drop. Do you think that those players are thinking Bitcoin's risky at this point? They buy back their yen. That's why dollar yen is sitting really right now at 155.25 from 157. So it's down two big figures, okay, or 200 points. Capital flees anything that's volatile right now. That's just what it does. Crypto gets hit first because it's the highest beta part of the risk curve. US dollar temporarily basically gives back some of its strength, giving the illusion again of like a little bit of the US dollar dominance fading, right? So yeah, this does help US dollar dominance in the short term actually coming off. But make no mistake, it always forces capital out of crypto into the short term, like what they deem is not risky, okay? Not because the fundamentals changed, but because macro traders need to unwind positions and move into what fund managers perceive as safe, and I'm doing the air quotes right now, safe assets. So don't forget also what we got going on. We got the Fed that we got quantitative tightening stopping. And the timing couldn't be more dramatic. We got the Fed chair speaking right as the quantitative tightening is ending. So that means two things. Markets are on edge. They're waiting for guidance. Liquidity expectations can shift instantly. But we gave you the warning beforehand. We said 93. I said, don't start smoking the cigar yet. Do not start buying in the pots outside and blowing like the proverbial whatever horn, the New Year's Eve horn, saying, "Hey, we're out of the woods, we're going back up." I told you that we weren't going to do that. Now, I could have been completely wrong, right? Yeah, I still can be completely wrong, but we timed it right. I'm going to show you a trade that we put on that was really awesome. I wish the guys would have followed me a little bit closer because I gave the signal at 93 2 days ago, right? But anyway, that's besides the point right now. So Bitcoin always reprices liquidity before equities. That we have to understand. Okay. Now, so when the yen carry trade cracks and the QT pauses and the Fed is about to speak, crypto is going to move. It always does. It will always move because the suits. They. Here's the thing. What's going to happen is this: is the playbook is clear. It always happens. Okay. Crypto's moved already downward first. Right. Bitcoin, XRP, Hood, Galaxy. They all took hits. Right. Now, it's going to reverse itself in due time because the suits will see they cannot get any real rate of return here. They can't. They're going to have to go back into high risk assets again once things stabilize in order to earn the money that they need to keep their shareholders happy. That's what it's all about. Now, remember, Bitcoin, like what's happening right now, Bitcoin is still digesting, that 36% mid-cycle flush. That was the harshest since 2023. And today's move is really just about global liquidity, not crypto fundamentals, in my opinion. In my opinion. As I said, we gave you the warning for the past few days that 93 was a massive wall of resistance, and we expected the market to cover the same ground twice. Do you remember that lesson? I said basically it was from Hazeltine Price back in 19, like I think 15, from Richard Wyckoff's interview for the Ticker magazine, which became the Wall Street, the Journal of Wall Street, or something crazy. It's very similar to Wall Street Journal, but that's what it changed into by the 1920s. However, this is what we expected: the market to cover basically the same ground twice. Now, we suggested a short up near 93. We said yesterday the break of 90 was going to send us back down to potentially the $84,000 level. We're sitting right now at 85,008. Okay, so pretty damn close. Now, I want to just show you. This is what, like, I see people talking, this is so hard to trade. And I'm going to tell you, it is true. The crypto is one of the hardest asset classes to trade. There are many asset managers that say really it's really difficult to trade on a daily basis. Because they're not really interested in like the movements that we're interested in. Because we can make a living off of off of like a 150 point move. We can make a living off of it, right? That's part of the game. If we get a $2,000 move, wow, we're really doing really well, right? So anyway, I want to show you the trade that we took, okay? And I'm not blowing my horn here or making rubbing it in your face, okay? But we put our money where our mouth is, right? I just want to show you this. Look, Bitcoin 27.59%. Could have been better, guys. Could have just let that trade run. You really weren't in any trouble with it. But hey, look, I don't want to be a quarterback, right? What they call it, armchair quarterback. Profit target was hit 73.94%. Now, look, like I said, we said that we believed that there was going to be a wall of resistance up here, and we took the trade. Okay, perfect. So if you really want some help, of course we don't win every trade. Okay, I'm not cherry picking either. This was just one of the last trades that we had. Okay, will I show losses? Absolutely, absolutely. No problem with that, because our losses are very tight. We're not going to let things get out of control. Okay, so this is one of the trades that we put on. If you're really serious about advancing your portfolio, maybe it doesn't cost you anything to join, and you don't have to take the trades that we say, but it gives you some ideas on like what you could be doing. All right, so enough of that. Let's get into the 2-hour chart, the infamous 2-hour chart for Bitcoin. All right, there it is. There's that nasty chart that we talked about. We said, look, right up there was that 93 resistance. We said there was a ultra short-term support at 90,000. Remember I said a couple of videos ago, I don't want to move this 91 because the 91 is a very important level. Dates back to February of 2025. That was the point that was really like kind of a hinge. Marketplace actually went up from it, and it also broke down and went down to $74,000. That where we thought it was coming to an end again, and then we rallied to 126,000 odd. All right, so here we are right now. Here was a level of support that I would have liked to see hold. It did not. It broke down through the 87.4. What does it mean? It means it's opening up 82,000. Okay, that's what it means right now. All right, so now we came down. We actually spiked down through. Let me see if I can open this up a little bit so it doesn't look so minuscule. Let's just get crazy, man. Let's just open it up. All right. And all right, now we're really digging in. All right. So we broke down through this wick right there. All right. So it's actually heading towards 83.5. Right. So now what does it need to do? Well, what was the low that we had on this bad boy so far? Right there. 84,756. Good old Tom. I think he said it was going to go to 84,000. All right, $700 off. Not bad. Oh man, it's got to get back up through 87.3, man. It's got to get back up through that. Actually, it's got to go a little bit higher. It's got to go like I would have to say 88, get above 88. So now what we have now, short term, okay, is we got a wall of resistance that's actually going to be right in here. All right, so this is now this upward spot right there. 88 191 is now the resistance. So what we're saying right now Bitcoin is doing, if you're going to follow the short-term trend, you're going to want to be looking to sell up there with a tight stop. So let me get a path right here. So we've made this low right now, right here. We have to come up. We have to break through this top right there. That's that red box. And then we have to basically come up, use the top of the box or right now the midpoint in the box, the 87, to hold to take us back up towards the 91 and then get over 91. Now, what's the odds of that happening right now? Not good. So really, if you're a short-term bull, you're going to want to, in my opinion, you're going to want to stay a little bit on the sidelines right now. But if you're a trader, you're going to want to look to sell 88, 89,000, tight stop on it to actually come back down and test the 84 and potentially even get down to maybe the 82. Now, a lot's going to be happening with IBIT today. So you got to pay attention to IBIT. So right now, the levels as they stand, all right, we got short-term, ultra short-term support at 84,000. Then we have a very, very important support at 82,000. The main support of this whole bloody thing is this 80,600. If we let that go, we're going to go to the new low of 78,241. Now, everybody, the bears are going to be throwing parties down there. They're going to be looking for this thing to freaking break big and take out the 74. I would tell them, slow it down, slow it down. I don't see that happening. So I would suggest if you're a bear, you'd lighten up some load at like 78, in my opinion. Okay, that's all I'm saying. Right now, the resistance 87, 88,000. Okay, 87,006 could open a range back up to 91. Now there's going to be a lot of sellers up there again. Remember, people got irrationally exuberant up there, and I warned them against it. I said, "Hey, don't get too excited about this. All right, we're probably going to basically come off a little bit before we could reset." Remember, when we talk about Bitcoin dominance later today, we're going to be saying that we want the Bitcoin dominance basically to come back up. And we needed to break 95,000 with volume, but not a spike in volume, continuous volume. Man, we got a lot of stuff to clear. Okay, and I understand that. So I'm just bracing you for everything. But remember, we're still expecting good old BlackRock, State Street, Vanguard, all those bad boys, right, to actually push Bitcoin into what we consider like the shakeout zone. Now, we telegraphed this move for the past few days, starting with what we considered was the MicroStrategy setup or the yen carry trade setup. So it's not like this is the first time we're saying this. We expected this, okay? And we're thinking that, Morgan Stanley Capital International is going to push Bitcoin into the breakout shakeout zone. And it could even be deeper than this, okay? It could be deeper than this. But we're just extrapolating where we could go, maybe 78, 77,000, where it's going to be like panic city. Panic city. Now, fear is going to dominate in this area. You're going to see extreme fear on the good old fear and greed index, right? Smart money really isn't panicking. Actually, BlackRock is like, sitting in the background, and they're getting ready to light up their cigar. They're waiting. So is State Street, so is Vanguard, so is Morgan Stanley Capital International, so is JP Morgan. They're all sitting there waiting. Now, they're also going to be positioning. And this is where most everybody on our side of the fence is going to throw the towel in and say, had enough. Had enough. Getting out of this. I hate it. Can't stand it. They're always out to get me. The proverbial day. But we gave you the warning. That's why we say join the pro group. And I'll show you how to do that in a little bit. Okay. But right now, when the fear peaks, the trend generally flips. Now, we got to time it perfectly. Now, as a trader, we can only use the past as a prologue, right? We can only use the past as a prologue. I want to take you back to this chart Now, we always like to say that history doesn't repeat, but it rhymes, right? Remember that we had that discussion? I don't enjoy saying it myself either, but it's true. Okay, because as I just said, we can only use the past as a prologue. History doesn't repeat exactly, but we could find some like trail maps in there. Not even road maps. They're like trail maps. So, they're covered with brush. You got to whack through them and then say, "Oh yeah, this was a path that the marketplace once took." And then once we uncover that, okay, we could start to say, "Hey, look, let's look at something here." Everybody remembers the 2020 pump. Few remember the crash that came first. Now, 2025 is playing the same cards, same pain, same setup, same windows of opportunity, and most of the marketplace on our side of the fence is asleep again. Really, this is your second chance. Now you got to pick your points. I'm not just saying just go buy Bitcoin or buy Ethereum or buy whatever your favorite stable coin is. Not yet, okay? But you got to pick your points. But we do believe it. We do believe in. We are believing at this point that this is a second chance. Okay, and most are not going to take it. They've been burned too many times before. So that's why I say you need some help navigating this stuff. Yeah, and remember, we expect IBIT today to open down. That's going to create more pressure on Bitcoin. So just realize that. Now, the points that you should be watching in IBIT are $50. The main point you got to watch is 46. I think it's going to drop that much today. It could go to 40, 48 again, potentially. Actually, it could actually potentially do a double bottom right on this pin bar right here on this day. Or what is this? It's daily chart. So right there, what was the low? 46.68. We could actually test that. If we break that, that's not a good thing. It's not a good thing. I'd like to see a higher low here and then slight consolidation. But look, we got to trade the marketplace. We have to trade it. All right, let's go into good old Ethereum. Now, we talked about this yesterday, and this is basically an upgrade that's not even being paid attention to. We had the Pectra upgrade. We had a 58% jump on it. Okay, and I'm going to tell you something. Ethereum is up. Okay, yeah, people go, "Oh, Ethereum stinks." Ethereum is up, and I'm going to go over that in a little bit. Okay, because I want to make a point later in this video. So just hang tight. So we're almost done. We're almost done. So we don't look. Fusaka is going to be an insanely positive upgrade for Ethereum. We went over it yesterday. Said basically L2s are using Ethereum for free. They're no longer going to be able to do that. They're going to have to pay. And then that's going to be burned. Those fees are going to be burned, taking Ethereum out of the marketplace, actually making less Ethereum available. And we're going to see Ethereum move. Okay, now, we could say Ethereum is stabilizing. It is not moving yet at all. It's kind of stuck. It's not leading yet, right? It's exactly what we expect in a liquidity-driven environment. But here's the kicker. We showed you this before. The Ethereum Bitcoin just hit a macro reversal zone. Last 3 times it happened, 2017, the altcoin supercycle began. 2021, Ethereum outperformed Bitcoin for months. And now the structure is repeating. Okay, Ethereum, it is the most hated asset today. Yet since January 23, it's still up 180%. It's up 180%. That's what I was alluding to. Now, it's not leading yet, but it's really bottoming very, very quietly. Now, we looked at this. Looking at our chart, wave 3 window just opened up. Wave 1, where the trend begins. Wave 2, shakeout phase. Okay? Wave 3, parabolic. Now, we printed this 3 times before. Each time it exploded. It's flashing again. You got to be patient with it. Yes, it's holding right at the support level of 2,800. If Bitcoin dips deeper, we can expect Ethereum to dip to 2,600. Okay? But you can't miss the overall move. You can't forget what's happening in Ethereum with the Fusaka upgrade, and that's coming. That's coming very, very quickly. So just be patient. Pick your points. We'll help you with that. Get into our pro group. All right? That's all I can say. All right, so Bitcoin dominance. Let's look at Bitcoin dominance. Oh, it's right around 59.40. It's basically holding steady right now, as we expected. We actually said that we expected Bitcoin dominance to go back up and then fall. But fall, okay, so wait. how we put it? We expect it to fall first, right? Where everybody's gonna start thinking, oh, I should be searching for like my new bags of altcoins, but then we're expecting a rally in it because we're expecting Bitcoin to come off, Bitcoin dominance to slightly come off a bit, maybe go down to 58, like 70, maybe, and then people that aren't really familiar with like markets, they're gonna, oh, I should be buying XRP, I should be buying whatever. But then we expect Bitcoin dominance to start rallying again as positioning starts occurring for the coin to take off and break out through 100,000 again. So there's a couple of things at play. All right, so right now we're at 59.39. We're nowhere near like the altcoin cycle yet, right? So Bitcoin cools, Ethereum rotates, then the alts wake up. So right now, but we need Bitcoin to actually start to rally again, then cool, and then Ethereum to take off. So dominance is not going to collapse overnight. It bleeds really slowly while liquidity rotates down the curve, we could say. But look, I just want to show you this. I'm thinking about this, and I know I'm going to be like a little, can we say, like bouncing around a little bit. But I just got to stress this for you, okay? Because I really want you guys to really consider this. Look, here's the Bitcoin short trade again, right? This shows that we're not a one-trick pony. We don't just say go buy, 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 buy. No, we trade this stuff. We make our money from trading this stuff. Now, this is what I want you to. You need to accept this reality in trading cryptos, and I alluded to this in the beginning of the video. This is the most difficult asset class to trade. It is. The volatility is insane, but that's what gives the opportunity, right? Now, everybody wants 100% gains for the year. Yeah. Everybody wants 250% gains for the year. Everybody wants 1,000% gains for the year. Everybody wants an infinite number of gains for the year. It's just the way we are. We're all greedy. We want, oh yeah, I want the easy money. There's no such thing as easy money. No such thing as easy money, especially in trading. Trading is not easy. It is not easy. It's an easy concept, but it's a very, very difficult art to master, for sure. Now, think about this. In crypto, you got to accept 30 to 50% pullbacks and months of boring chop. Now, I showed you in the other video, Google, Microsoft, Amazon, the drawdowns that they had, but they had massive wins, okay? But people had to go through those drawdowns if they were buy and hold type of people. We're not. We're in and out, buying and selling, buying and selling. So if we think about it, Bitcoin's up 520% since January 23. That's 173% per year. Now, I said this before. 10 out of the last 36 months were new highs. 10 out of the last 36 months were new highs. That means 73% of the time you are in drops, scary drawdowns. And again, I showed you the Google, Microsoft, and all those tech stocks, right? So if you can stomach that, you'll be in for some good gains. Now you could trade it every day and enjoy the volatility, which is what we do. We sell and buy, we buy and sell. But if you can't stomach that, if you can't, you need to really consider just buying the S&P and enjoy your 10% per year. But if you can stomach the up and down movements of crypto, you could tap into the potential, not guaranteed. Nothing is guaranteed in trading. So we have to say the potential of upside that made like Coin 805% up. Hood 1,450% up. Sol 1460, 1,460% up. Ethereum 180% up. If you can do it, okay, and that's exactly what we help you navigate in the crypto pro group. We give you more clarity, more structure, more conviction, less panic. So if you're serious about it, level up. So now I'm going to tell you how you can join us. Okay, before we go into altcoins. All right, here's how you join us. You come on into the link in our description. You just click this link right there. You'll be taken over to our Telegram community, completely free to join. Okay, completely free to join. We drop insane alpha trading opportunities daily in there. shorts, longs, and we talk about what projects we're looking at that are going to be on the top of 2026. Okay, so we cover it all there. Hey, if you want to go it alone, if you just say, hey, nah, I don't want to talk to you guys, you could join through our link here, WEX and BTCC. They both offer great bonuses for you. Right now, through our link, you get no fees for life in WEX and BTCC, low fees, fast execution in both these brokers. You get a $500 token giveaway. So if you got a small account, $1,000, you get 50% increase. But I highly suggest that you come on over and join our pro community where you can get insane trades that we put out. Now, again, we do not win every trade. Okay, but our wins are much greater than our losses. If anybody tells you that they never lose, what I want you to do is turn your back to them and run as fast as you can away from them. And make sure you hold on to your wallet as you run away. Okay, so I'm just telling you that. All right, let's get on over to good old, finish up with a little bit of Bitcoin dominance, and then we'll talk about altcoins. So just finishing up, Bitcoin dominance right now is going to be a little tricky to navigate, right? We're expecting it to come off a little bit. Don't get fooled by it, because then we're expecting it to actually rally back up. That will create havoc in your portfolio. And then we're expecting the final breakdown. All right, now altcoins. All right, right now nothing's really happening in the good old altcoin market. Altcoins are basically in the setup phase right now. You know the drill. Weak hands are definitely panicking. Retail's fleeing. I'm not talking about you guys. I know you guys watch me every day. You're part of the crypto show. You love it. I love you guys. So yeah, I know I'm not saying you guys are panicking, right? So smart money is quietly rotating into oversold L1s, L2s, and high beta names. Now, we know the drill, right? Bitcoin dominance, dominance rolls, Ethereum, Bitcoin reverses, alts lag, and then rip. So we just got to be patient with this. Okay, we have to be patient with it. So right now it's not alt season. I'm one big, I've been saying I don't know if we're going to get it until the 2026, and we might not get it this year because of everything that's happening. Look, Bitcoin is going through, and the whole crypto market is going through a shock right now. We're talking about regulation. We got the big boys involved in this. This is something that's never happened before, so we just got to be patient with everything. All right, so that's the wrap up for today. Remember, Crypto Crew, what we got going on right here is we got the potential of the yen carry trade creating a little bit of a wobble in the marketplace. We got the Fed in focus. We know that crypto always gets clipped first. It's the same story that we've seen for 15 years. Bitcoin is still holding key structure, though. It's still holding key structure. Ethereum is really stabilizing. I don't understand why it's not right. It's going to run when Bitcoin runs. And actually, Ethereum could give a lift to Bitcoin if you think about it. Because with the Fusaka upgrade, there's going to be more attention paid. And maybe the suits are going to start to say, hey, I just don't want to sit in the yen long bond. I'm not going to make any money here, especially now I got currency to worry about, because if the dollar starts to move up again, I'm going to be losing in the dollar and gaining in yen. I don't want to do that. So basically, it's going to be break even, right? So anyway, all coins are positioning. Zoom out, stay disciplined, respect the levels. Make sure you come on over to X. Follow us on X, where we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. So what do you got to do? Well, you got to seriously think about joining our pro group. What else you got to do? You have to do your own research. As you know, I am a trader. I am not a financial advisor. And the last thing you got to do as a short-term trader is you got to enjoy the party, but dance near the door. I'll see you tomorrow. Leave some good comments for me. Look forward to talking to you tomorrow. Cheers.